Yo, Crypto Bulls, how are we today? Hope you're all enjoying your day so far. It's Crypto Bullseye here, and as promised, I'm bringing you this next edition of this free tutorial course. So, yep, guys, it is free. So make sure you hit that like button, smash the subscribe if you're new to the channel, and make sure that you follow this course step by step. So it follows on from last week's episode where we talked about the candlestick close. And what story can the candlestick close tell us? What is a Japanese candlestick? Go back and watch it if you haven't done so already. This episode, we're going to be focusing on the candlestick wick or the candlestick shadow, whatever you call it. It can tell us a story, and we need to decipher what that story tells us. So I promise you guys, by the end of this video, you're going to understand what is a weak candlestick, what is a strong candlestick, and it's going to give you more of an edge in the market, because what we're doing is we're trying to gauge probabilities as to whether price action is going to move in our predicted direction. And we need to look at those clues, and we need to start with the candlestick. We're starting from the very, very, very basics here, guys. We're starting with what is the candlestick? How can each candlestick and each session decode a story for us? How can we get an edge by looking into that story? So we're going to be talking about that today. And if you are new to the channel, like I say, make sure you do hit that subscribe button. Let's get into the video. Right, okay, Crypto Bulls, it's all about the story. It is all about trying to identify what the candlestick is telling us and how can we identify what the candlestick is telling us. By the end of this video, guys, you're going to know exactly what a strong candlestick is, what a weak candlestick is, and how you can get that edge in the market. All we need is a higher probability chance of something happening. So you can learn how you can get the edge in the market. And that's what we're going to talk about in this video. So I want you to blow your mind, guys. I want to blow your mind. I want you to think of something. Pretend you're in a game of tug of war. So you're in a game of tug of war just like this. Possibly not like that. So you're in a game of tug of war just like this. Right, okay, so you're in a game of tug of war, finally, just like this. Right, okay, tug of war. Buyers and the sellers are fighting. What level are the buyers and the sellers fighting at? Are they selling at support? Are they selling at resistance? Are they buying at support? Are they buying at resistance? Because the sellers and the buyers do lay off. Sometimes the buyers become sellers, sometimes the sellers become buyers. And it sounds complicated, guys, but looking at a candlestick can help us identify this. And more importantly, the candlestick wick can tell us, because where you've got long wicks and where you've got regular wicks, that creates a resistance level or a support level. And what happens when you do create that resistance level or support level? It gives you a higher probability of that sticking again because it's stuck before in the past. So that's what we're going to talk about. I'm going to blow your mind. Let's get into the charts, guys. Okay, we're going to do two things here. We're going to look at the price chart in real time. I've got the Bitcoin on the daily chart here. We're going to look at the price chart, and we're going to try and identify now what exactly is happening. There's lots of sideways action happening. You can't tell too much. If you're new to charting, this doesn't make too much sense to you. So let's go through it step by step, and then we're going to come back, and then we're going to tell a story of what this chart is telling us. So firstly, we're going to identify what is a strong candlestick, what is a weak candlestick, and we're going to go over a strong wick, a weak wick, and how that can tell us a story between each session as to whether the bulls or the bears are winning. You add support and resistance, that's where it blows your mind, guys, because these things play out at support and resistance. And what does that do? It allows for good risk management. It's all about good risk management. It's all about preservation of capital, protecting what it is that you've got first and foremost. And this can give us an edge in how to do that. So let's look at the candlesticks first, and then we'll come back to the price chart and tell the story of what this price chart is actually saying to us. So since you are all a bunch of crypto bulls, we'll go over the bullish examples and we'll tell the story of what the candlestick is telling us. And remember, each candlestick is one session. Each candlestick represents a time frame. This specific time frame that I showed you on the Bitcoin chart was the 1 day. So each candle represents that 1 day session. So if you were on the 4-hour chart, each candle would represent a 4-hour candle. So you've got to remember that. And that's why each candle tells a story within another candle, within another candle. So within the 1 day chart, there's lots going on. There might be one candle on the 1 day, but you put that to the 1 hour, and that's 24 candles that are telling a story within that. So don't over confuse yourself. Pick your time frame, and let's go over some examples here now. Okay, crypto bulls, are you with me? This is a community thing. We're doing this together. So what I want you to do is interact. So you can either shout at the screen, you can leave in the comments, whatever you prefer. Just interact, and then what it does is it helps with the learning. So first and foremost, I want you to shout out at the screen, is this a bullish or is it a bearish candle? Based on what you've learned, based on what you know, is this a bullish or a bearish candle, and why? So we know that we've got the open here at the bottom and the close is above the open. So we know that it's a bullish candle. Now, is it a strong bullish candle or is it a weak bullish candle? It's got this huge body on here, guys. So any of you guys that said strong bullish candle, you are correct. So it is a strong bullish candle. And next, what we've got is another candle. Is this a strong bullish candle or is it a weak bullish candle? You can see it's got a smaller body. And at some point, the bears have managed to push price action to the extreme lows here, but the bulls have regained control and pushed price further up, closing above the open and with a little wick at the top. So that's a strong, medium, bullish candle. Next, guys, I want you to shout out at the screen. Is this a strong or is it a weak bullish candle? Strong or weak? So at some point, guys, the bears and the bulls have been fighting, and this is where the tug of war thing comes in. The bulls and the bears have been fighting. The bulls overall have regained momentum here, and we've managed to close above the open. However, it's showing indecision. It's right in the middle. You've got this wick to the upside where the bulls have managed to push price up here. And then you've got the wick to the downside where the bears have managed to push price. And then you've got this little body in the middle. So that's showing indecision, guys, indecision. Anyone that said that, well done to you. And the last one, is this a strong bullish or is it a weak bullish candle? This one is a weak bullish candle, guys. So we've closed above the open, showing it is a bullish candle. It's a green candle. We've managed to close above the open. However, the bulls at some point during this session have pushed price action all the way to this high. At some point during the session, the candle looked like this one. But the bears regained control, pushed price action right down to the bottom, and that's showing a weak bullish candle. So flip it on reverse for the bearish scenario. Completely flip it on reverse. And you can see that how we can identify clues whether something's a strong bullish or whether something's a weak bullish candle by looking at the wicks of the candle. Now we're going to go into the charts and we're going to add support and resistance, and we're going to learn a story from the wicks as well. So let's get into that now. Okay, story time. We're going to put our story hat on. We're going to get rid of our technical analysis hat, and then we're just going to learn from what each of these candles is telling us on the day and whether we can decipher what's happening going forward. You bulk them all together, guys, and you've got higher probabilities, and that's what we're in the game for, is higher probabilities. So we're going to go back in time. You can see this nasty dump on Bitcoin. What are these candlesticks telling us here? Strong bearish bodies to the downside. You're not getting much of a wick. You're not getting much of a fight from the bulls at these levels. No fight from the bulls at these levels, and you get the nasty, nasty wicks to the downside. So what is that telling us? It's telling us people feel crap on that day. It's telling us that the bulls haven't got any confidence in the market. They're backing away. They're protecting themselves. They can become sellers at this point. Where do you create a base, and how can you tell that a base is being created? You can look at the candle wick, and that's what this episode's about. You've got this huge candle wick to the downside here. And then what happens on the back of that? You've created your base. So you created your base, and how long is this range held for? Let's have a look. 33 days, 33 bars. Each candle represents 1 day of price action, 33 days. So that base is held for 33 days. Ultimately, we broke it. Strong bearish candle at the downside, exactly the same. You've lost confidence. The bulls have lost confidence in the market. The bulls become sellers in certain instances. The bears become more aggressive with their approach and start selling higher amounts. And then you get the huge move to the downside. Where's the base held? You can see, looking at the wicks. Put the wicks on here. You can tell this is expected to become some kind of a support at some point in the future until it's broken, and then it can become resistance. So the bulls regain control here, and you can see these wicks here. Look at all these wicks. Bulls regaining control until at what point? Until the point where you start seeing the candle wicks again. Lots of wicks, lots of wicks. What does this do? Give us resistance levels going forward. If it's broken, you'd expect it to act as support. What does this coincide with? The previous low of this move. So we're making a series of lower lows and lower highs. You've got this wick here, which is telling us a story. And that story is this is going to be resistance going forward. So what was previous support flips resistance, and that's exactly what happened here. So we've made a base for quite a long time here on the Bitcoin, and let's have a look. How long was this base? Let's have a look. Sideways action for some time. 149 days, 149 days of nothingness. What can you tell here? This base has been respected from previous levels. So you can see that this has acted as support for such a long time until we broke it. Once we've broke it, we look for the next level. How can we identify the next level? You look for the wicks. Got wicks down here. And you made a base. You made a base. This should act as support going forward. What happens? You broke this level here. Look at how long price action hovered at this level before it managed to break through. That's the bulls and the bears fighting there. That's your tug of war, guys. That's your tug of war. 56 days of fighting until we broke to the upside. Look at this, guys. Look at the resistance here. Look at the resistance on this wick here. Huge resistance until you break it, and you expect that to act as support. What if it doesn't act as support going forward? What if it doesn't? It expected to become resistant. So what does that mean? It means you can put good risk management in play. If you'd expect this level here to be your support level, that means below that, you can apply stop losses. Remember, guys, this is an educational video. None of this is financial advice. So don't go out and try this on the charts. You can practice on the charts, but don't go and try it if you're a novice. So where are you putting it? At the highs. I'm going to teach you guys. I'm going to teach you how you can do it yourself. Right. Okay. So what does that do? It gives us good risk management, 5.12 to 1. So if price action pulled back down to this level and price action respected this level, how do we know if price action respects this level? You're going to have a strong wick. You're going to have a strong wick, which is going to create a base going forward. That's a reaction that you want. That's the reaction that you need. Tight stop losses. You're not shooting for the moon. You're shooting for the previous high. And that's just one thing that you can do, guys. So appropriate risk management is the key. Preservation of capital is the key. And if you did enjoy this episode, please subscribe to the channel, hit the like button, let the algorithm do its thing. Leave me comments if you've got any questions about what I've talked about, and I'll see you guys in the next video. If you want me to carry on with this tutorial series, let me know, guys. Hit that notification bell and let's teach the community together. Take care from me. Enjoy the rest of your day. Goodbye.